Okay, we'll go ahead and call this meeting to order. Could you kind of pop up so we can see who's on Zoom?
No one on Zoom.
No one on Zoom. Okay. Would you join me, please, in the Pledge of Allegiance? Pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice. Okay, do we have any, moving on to item 2, additions or deletions or corrections to our agenda? And if there's none, I'd entertain a motion.
The agenda.
I'll second that.
It's been moved and seconded. We accept the agenda. All in favor, say aye.
Aye.
Aye. Any opposed? Nope. So that passes. Item number 3. Persons present, not on the, for items not on the agenda, 3 minutes per speaker. And I think we have someone that would like to speak. Yeah, go ahead.
There's nobody. Oh, are you recording? All right. Trustees, first, I'd like to thank you for dedicating your day to the town. I'd like to comment on the audit and implications to your budget discussion. I'm concerned with the language at the bottom of page 5 of your agenda, where the auditor cannot, quote, provide assurance on the information because the limited procedures do not provide sufficient evidence to express an opinion or provide any assurance. So the audit sounds incomplete, a resounding no confidence vote for the lack of procedure by last year's town hall staff. My hope is that the current staff have begun to fix errors of the past. Trustees, you must help. Look at the findings on the top of page 40 of your agenda and include in the job descriptions and allow for future training of town hall employees the requirement for, quote, extensive knowledge of governmental accounting and reporting. Moving forward, the 2023 budget requires direction. I do like and I appreciate the time spent reviewing the comprehensive plan today, but I offer the following goal to guide your budget discussion. A balanced, prioritized budget with regular trustee oversight and direction, empowering committees to make major decisions regarding their areas of interest. To explain parts of the goal, our tax dollars require prioritization. Any money you spend on an amenity such as the pool comes at the expense of our town's #1 priority, active wildfire mitigation. Trustee oversight and direction. Page 40 of your agenda contains audit findings related to a disturbing lack of internal controls and checks and balances. This is obviously an indictment of the Jane Newberry model of trustees ignoring the day-to-day running of our town. Such ignorance opens the town to the potential for undisclosed fraud, waste, and abuse. Trustees, you have the ultimate fiduciary responsibility for our town. Please involve yourselves with the continuing details of revenues and expenses. The last part of the goal I offer is empowering the committees. The town simply cannot progress without further involving our committees and commissions in the details and decisions relating to their areas, freeing up time for the town staff to focus on improving budget and accounting processes. Please ask your committee members if they're as involved as they should be regarding their portfolios. If not, what direction will you provide town staff to fix this lack of meaningful involvement? To close, things need to change. The audit highlights the major failures of lack of involvement of the past administration. Please consider the budget goal a balanced, prioritized budget with regular trustee oversight and direction, empowering committees to make major decisions regarding their areas of interest.
Okay, thank you. Do we have another? Yeah, go ahead, please.
You'll have to hit the button again there, Ann.
My name is Ann Ash. Can you hear me? And You can't hear?
Yeah. Is it blue?
It's blue.
Okay. Yeah,
Just
just,
a little closer?
yeah, that,
Okay.
yeah.
Well, I think Rocco certainly has a lot of excellent ideas. I'm a member of the planning commission as well, and I think we are trying hard. But I do feel that with the extensive regulations of government, state, county, we need a staff. And I find it unfair that he criticized the former administration. I think everyone's a volunteer and they tried hard. Thank you.
Okay, thank you. Do we have others? Anyone on Zoom?
Carolyn, did you have any public comment?
Yeah, not hearing any. Just to confirm, no one else? Okay. We'll move on then to item number 4, consent agenda, minutes from October 4th, 2022 Board of Trustees meeting. And if there's no questions or comments, I'd entertain a motion on that one.
I'll move to approve the minutes of the October 4, 2022 meeting.
We'll second that.
It's been moved and seconded. We approve the minutes from the October 4th, 2022 Board of Trustees meeting. All in favor, say aye. Aye. And there's no opposed. So motion passes. Item number 5, our presentation on our audit report. Kyle Logan.
Okay, can you hear me?
Let me give you this.
Yeah, that's much better. Okay, well, good morning. My name's Kyle Logan. I am the town's independent auditor. And I'm here this morning to present the results of our audit of the town's financial statements for the year ended December 31st, 2021. So I know there's new faces here, so I'll kind of give you an idea of what, why we do this. One is because there's state statute that requires all local government entities in the state of Colorado to have an independent audit of their financial statements each year. And so that is the purpose of this whole engagement. And so our process involves several different procedures and testing that starts with, we pick samples of cash disbursements, we pick samples of payroll transactions, and look at your internal controls and policies and procedures that have been put in place by the administrations over the years. And we test those controls, not necessarily to rely, but to understand how those policies and procedures that have been put in place. And then we also, read board meeting minutes. We look at contracts and agreements that have been entered into throughout the year as far as having a financial impact on the town. We send out third-party confirmation letters to like the banks and financial institutions and to the counties to verify certain revenue streams. We also look at the bank balances to see if what the banks say they're holding for the town is what's being reported in the accounting records. Then we do some analytical tests comparing 2021 balances with 2020 balances and obtain, understanding of why there were fluctuations or changes from year to year. And then after all that process is done, that gives me a level of comfort in order to issue an opinion on the financial statements. Now, I will say the financial statements, all the numbers in this document, all the footnote disclosures in this document, they're responsibility of the town's management. My responsibility as your independent auditor is to audit them and issue an opinion. And so following the table of contents is the independent auditor's report. And so on that 2-page report, we actually had a change in the format of that this year from prior years, in that they moved the opinion section to the very front, which I like this because really that's the most important section in this 3-page document. And so at the beginning there, it talks about what we did and our opinion on the financial statements for the year ended December 31st, 2021 is an unmodified opinion. Now, what that means in layman's terms, that's a clean opinion. And what that tells you as a board, that tells you that all the numbers in this document, all the footnote disclosures in this document are fairly stated and materially correct as of December 31st, 2021. So again, that's the best that you can receive from an independent audit firm. Okay. So then continuing in the independent auditor's report, it talks about management's responsibilities for everything in this document. It talks about our responsibilities as your auditor and the fact that we are independent. In previous years, it was always an implied thing, but now we state it in this independent auditor's report. And then we refer to the required supplementary information, which is primarily your general fund budget, and then the other information, which is your conservation trust fund budgets and capital improvement funds budget, as well as the local highway finance report. And so this kind of covers everything in the financial statements that now I will go through and hit on some highlights. So the next section is a management discussion and analysis. And so basically what this is required reporting by the Governmental Accounting Standards Board. And it's kind of a written narrative of highlights that have happened over the past year. Also comparing 2021 with 2020 and some significant, changes between the 2 years. And really that 5 to 6 pages goes through all that. And so then following the management's discussion and analysis is the basic financial statements. And so
Could I ask a question? Real
Sure.
quick.
oh yeah,
Okay, it says at the end of 2021, we had $462,090 unrestricted net position. Is that our reserves?
yes,
Okay,
you can say that.
okay.
And I'll
Okay,
touch more on that too.
okay,
but-
thanks.
Yeah, definitely. If you have a question as I'm going through this, please ask.
Okay.
Okay. And so then we start on the basic financial statements. There's 2 presentations here. Pages 1 and 2 are the financial statements that are called the government-wide, which really is similar to how a business or a corporation would report on the full accrual basis of accounting. And the biggest difference between this reporting and what's on the following pages 3 through 6 is that we show the capital assets, which that's all your property, equipment, vehicles that are owned by the town that normally do not show up in the day-to-day accounting system. Okay. And so as you can see there on page 1, your total assets, total liabilities, deferred inflows of resources, and net position. Those are your 4 main categories. And this is like a snapshot picture at December 31st. Excuse me. Of all the town's assets, all of the claims against those assets or liabilities, and the net position or net worth of the town. Okay. And so as we can see there, your total assets, 2.6 million. That's about a $300,000 increase or 13% over last year. And of that, 3 main categories are your capital assets at 1.7 million, which makes up about 66% of your total assets. had about $178,000 increase over last year. And a lot of that is related to the starting and payment of the fitness court that was finished being installed here in 2022. The next section, your cash and investments, about 522,000. That makes up about 20% of your total assets. Again, $44,000 increase over last year. Part of this increase relates to the unspent ARPA NEU monies that you received during 2021, the 90,000 that was not spent. Okay. And then your receivables, property taxes, sales taxes, the short-term rental occupancy tax makes up about 366,000. Again, that's a $71,000 increase over last year. Biggest part of that is because of the short-term rental occupancy tax. Okay, because you guys collected amounts in the first 2 months of 2022 that actually related to the activity that happened in November and December of 2021. So we recognize that revenue. Okay. So that kind of covers the three main categories of your assets. The next section, your total liabilities, 176,000. That's again about a $52,000 increase over 2020. Biggest piece of that, as I mentioned, in your cash is the unearned revenue for the ARPA NEU monies. So as you guys, find allowable and eligible cost, then we will recognize that revenue in the upcoming years. And of course, here in 2022, you received the second tranche of that 90,000. So anyway, one thing I've noticed with my municipalities and looking at the federal guidelines is in January of 2022, they actually loosened some of the restrictions from the original law. And so it's because it was quite a challenge for municipalities to try and figure out how to spend the money. Okay. So anyway, that again, as time goes and you spend that, you have till December 31st, 2024 to spend it all. And so we will monitor that going forward. And then the next section.
Another question
Yeah.
maybe for you and staff. So that
Sure.
means we have a total of 180,000 of ARPA funds that we need to spend before December 2024.
Yeah, and we'll have to look and see the discussion that occurred last September with the previous board. And I think Sunday you were here and participated in that. When the town received that funding, they had looked at doing a couple of things with it. A, the implementation of the restrooms down at Pool Park, and B, the bear-proof receptacles. We received a grant for the bear-proof receptacles. I anticipate that we are probably going to have a little bit of expense in implementing that project, probably just a little bit for tree removal that would help support that project. And then, of course, we will need to kind of look at, the feasibility of a restroom down there. I think that this money would go a lot further in the way of matching funds for a grant, and knowing that we have until the end of 2024 to spend it, we do have some time to pursue those other funding opportunities.
Thank you.
Okay, so then the next section there, this deferred inflow for the deferred property taxes. So, in December of each year, part of the budget process, you certify mill levy for property taxes to be collected in the following year. Well, once that certification happens, that basically attaches a lien for the property taxes on the resident's property. Well, because it's not collected till the following year, we again kind of defer it because it's not available to be recognized as revenue until the next year when it's collected. Okay, and so I will say, I looked at the AV, so your assessed values at that point increased by about 15% from the prior year. So that's why we see an increase in this amount that is being collected in 2022. Okay. And then the bottom section, net position or net worth. There's three types of categories in this. We have net investment in capital assets. So basically you take a portion of your net worth and set it aside that's related to the capital assets up in the asset section. And then we have restrictions. And again, restriction is from an outside, either third party or law. And so because of Tabor requires a 3% reserve. That's what the restricted for emergencies is. And then the restricted for parks and recreation, that's basically your unspent conservation trust monies or lottery dollars. Okay. And so again, they're restricted for a specific purpose in the future. That leaves you with the unrestricted or unreserved amount of 462,000. And so what that means, there's no strings attached to it. That is available to roll forward into the next year for use in operations and as the town sees fit. Okay. So any questions on the statement of net position before I move to the next page? Okay. Again, if you do have questions after you have some time to think about this, let Becky and Nate know, and they can get in contact with me and I'll find you an answer for it. Okay. Okay. So the next page, page 2, statement of activities. Again, this is basically your income statement and it's on a full accrual basis. So it includes depreciation expense that on the capital assets on page 1. That's primarily the main difference between this page and the page 4 when we get to that on the governmental funds. And so the way this statement flows, it starts on the left and it starts with expenses first. Okay. And we have the four categories: general government, public safety, public works, parks and recreation. And so your total expenses, 795,000. That's an increase of about 142,000 over last year. And again, 2020, we were kind of in COVID mode. So expenditures weren't as much, turnover in staff and getting staffing back up to speed here in 2021. Another cost in there is the planning code rewrite, some cost related to that. We also had payout of the previous town manager upon her leaving. The public safety, if I recall right, I think we're down an officer in 2020. So 2021, we were back up. Public works, again, the staffing for a full year in 2021. We had some road maintenance costs, some equipment repairs. And then Parks and Rec, 2020, we didn't really have any cost because everything was closed down. And so in 2021, a few things were occurred. So again, that's kind of some highlights of why the increase in our expenses over the year. Then the next section there.
And excuse me, another question.
Yeah.
Is this just general fund or does this include capital?
This is everything.
Everything.
So
Okay.
statement of activities includes all 3 funds and all the activities. Okay. So then the next section to the right of the expenses are your program revenues. And so what this is there are certain revenues that the town receives or, in forms of charges for services, or for, grants or grant type revenues that are received. And so if they relate to one of the specific, expense categories, then they're reported here. And so your program revenues increased about 148,000 over last year. included in that increase, we had the licenses for the short-term rentals, which kind of some started in 2020, but then we had a lot more in 2021. And you guys seem to have a pretty darn good system of tracking this. So that's good. And then the operating grants there, well, that's the Pikes Peak RTA maintenance funds that you receive. And again, you guys submit qualifying expenses to the RTA, and then they will reimburse you for those. Okay. Then the capital grants and contributions. This is some of it's the lottery monies that were spent, and then also that $218,000 that includes the $207,000 grant or donation from the Kirkpatrick family for the fitness court and the related cost of that. So that's reported there. And so that kind of covers the program revenues. And as you can see there at the right, all the numbers, except for the Parks and Rec, are in brackets. Well, that shows you that your program revenues, which this is common with almost all municipalities, your program revenues do not generate enough in order to cover your expenses related to the different categories. And so then we look down at the bottom there, the general revenue section. Okay. And so we have your property and specific ownership taxes, the sales taxes, use taxes, the short-term rental occupancy tax, franchise, and then some other taxes included in here, and showing total general revenues of about 680,000. And so that's a kind of comparable to last year, about 40,000 higher. Part of that, again, is the one increase in sales taxes, but also your short-term rental occupancy tax, a big increase there. The auto use tax actually went down from prior years, so I guess not as many vehicles were being purchased in 2021. And then your other includes the highway users tax monies that you receive from the state on a monthly basis. So then that comes down when it's all said and done, your change in net position for the year was 212,000. So that's about a 10% increase in your overall net position or net worth on an accrual basis. Okay. All right. Any questions on that before I move on? Okay. So then these next 3 pages, these are the governmental funds. And this is what you're used to seeing or will be seen as reports are being provided by staff to you guys. And so the balance sheet for the governmental funds, again, this is similar to page 1, except it does not show the capital assets. This is called the modified accrual basis of accounting. And so we have, again, the same categories that we had on page 1, your assets, your liabilities, deferred inflow of resources, and fund equity or the net worth. And what this shows is the 3 funds that the town reports on. And primarily what drives these 3 funds is your budgetary process, because each year when you adopt your budget, you are adopting a budget for the general fund, the capital improvements fund, and the conservation trust fund. So then we report in accordance with that. Okay. And so again, kind of a snapshot picture at December 31st of all the assets, the liabilities, the deferred property taxes, and the fund equity or fund balance. And so again, the general fund, that's your main operations funds, shows pretty much everything. Your capital improvements, that's set up for pretty much special projects that have been budgeted and approved for tracking them. And then the conservation trust fund, again, this is your lottery money that has been received over the years with restrictions on it. Okay. And so your assets are very, with the exception of the capital assets, very similar to what was presented on page 1. So again, increases in your cash and your property taxes receivable, as I mentioned. The amounts due from other governments, well, this is your sales taxes and your short-term rental taxes, the due from other funds. And so that 19,000 there, you can see that in the liability section under the Conservation Trust Fund, it shows up there as due to other funds. What that is over the past couple of years, for whatever reason, there were monies being deposited into the Conservation Trust bank account that actually related to the general fund. So the revenue gets reported in general fund, and the cash, for whatever reason, the timing just didn't get it transferred over. And I know during our audit process, I believe that got taken care of. So that will go away. So that's just again, that's one thing we look at as we're going through this process. So your total liabilities, accounts payable, your accrued salaries and benefits, basically your last payroll in December that was paid in January, we booked that back because it relates to 2021. And then the unearned revenue related to the ARPA money, the 90,000. We talked about the deferred property tax revenue, the 212,000, and then we get down to the fund equity and fund balance. So your fund balance is, total of just short of 500,000. And of that, we talked about the restrictions for Tabor emergency, the restrictions related to the unspent lottery monies. And then by definition, the fund balance in the capital improvements fund is assigned. So it's basically assigned for future capital improvements project. And then we have unassigned in the general fund, $454,000. And so what I like to look at is how does this compare to, say, your expenditures that are on page 4 for the general fund? And how long do you have to last? And so the 454,000, if we were to look at the expenditures for the general fund on page 4 there, the 668,000, you basically have 8 months of operations in your unreserved funds. So what that tells you is that, if for whatever reason you weren't receiving the property taxes or the sales taxes, you guys could operate for up to eight months before dire straits happens. So that's pretty good. I don't always see this with small municipalities, especially in a local rural environment. Okay. So anyway, that's something to kind of keep an eye on as time goes. I know when, that money is it's available for next year for whatever the board sees fit. But you just got to keep an eye on it so that it doesn't start going down, which, year over year, I keep an eye on that. And if we do start seeing the fund balance dropping significantly, I'll let you know and say, hey, you guys either need to change your spending habits or you need to find additional revenue sources.
Question,
Yeah.
in your experience, have you seen a general number for how much is good to have? You say we have 8 months. Should we target for a year? Is 6
Yeah.
months? I mean, I'm just kind of curious if there's kind of some number out there floating that, people and other municipalities tend to target for.
So I get that question a lot.
Okay.
And a lot of times my answer is that's a loaded question
Uh-huh.
because it's hard. Every client, municipality, district, local government, they're different. So a lot of times I'll respond as what makes the board comfortable, because really you guys are the ones that control that. And so what is comfortable? I will say 8 months, that's a pretty good number because you think about it, you don't really start receiving your property taxes until February, March timeframe. Okay. And so 2 months, but you are receiving sales taxes. So I know I'm not giving you a specific
just
answer to
curious
your
if-
question, but
If someone
yeah.
else had a target.
and
figure.
one place you could look at, and I haven't checked lately, is the CML website. I don't know if they have studies like that, that they make recommendations, but the Colorado Municipal League, they, that's part of their business is helping municipalities with certain things. So I haven't checked lately to see.
I'll check.
Okay. Okay, so then let's go to page 4. Statement of revenues, expenditures, and changes in fund balance. And again, this is the income statement for the 3 individual funds by column. And so it shows you the general fund total revenues about 775,000. And really, this is a majority of the activity of the town. Okay, your expenditures 668,000. So that leaves you with a net income before transfers of 107,000. Now, you guys, each year in the budget process, you budget to transfer monies from the general fund to the capital improvement funds, either for match reasons related to grants or certain projects. And so, this year you transferred out 84,000 to the capital improvements fund. Okay. And so you can see over there in the capital improvements fund column that had you not transferred that 84,000, that fund would have been upside down. And so that shows you that, the revenues you received did not cover all the expenditures. But again, that's by design, because when you do these projects, you'll say, well, the town will match this percentage or this dollar amount. And so that's kind of how you show that, by making that transfer from the general fund to the capital improvements fund. Okay. So each year, I take a look at that to make sure that you're not transferring too much out of your general fund. And so you can see transferring that 84,000 still left you with like 22,000 of net income or increase in your fund balance. Okay. So, and each year that'll fluctuate depending on what projects you have going on in your capital improvements fund and what revenue sources you are receiving for those. Okay. All right. So any questions on page 4? Okay, moving on. Page 5, basically what this does, it's a reconciliation of page 4 up to page 2, just basically going from your net income for the governmental funds to your net income for governmental activities up on page 2. And primarily you can see that, you capitalized $284,000 of capital assets. And then you had depreciation expense of 106,000 on the existing capital assets. So again, because that capital outlay gets reported as an expenditure in the governmental funds, but on the government wide, it's reported as a capital asset on the balance sheet. So we get to add that cost back. Okay. All right. So then, following the financial statements, we get into the notes to the financial statements, pages 6 through 16, which is the bulk of the report. And so the governmental accounting standards require certain things to be disclosed in the footnotes, either to support numbers in the financial statements up in the front, or provide more detail, or talk about, as in note 1, your significant accounting policies that are followed by the town, certain things that are reported, for instance, capital assets, your cash and investments, the property tax calendar, as far as when it's levied, when it's collected. And so again, we look through these to make sure that what's disclosed in here is what's required by the accounting standards. And so note 1, significant summary of significant accounting policies. This is the biggest part of your notes, pages 6 through 11. And so again, it talks about, as I mentioned, and then also explains certain things related to like your accounting policies, for reporting certain things in the financial statements. Okay. And then at the bottom of page 11, going through page 13, is your cash and investments footnote. And so again, I'd mentioned earlier that we send confirmation letters out to the banks to verify the balances and investment balances. And so, one thing we look at there at the top of page 12 is that, anything in excess of $250,000 is not covered by FDIC in a bank. And so the nice thing about it is that Colorado has the PDPA Act, or Public Depository Protection Act, that requires a financial institution such as a bank, if you are holding local government funds in the state of Colorado, you are required to have those funds collateralized up to 102%. And so each financial institution, they're required quarterly to report this to the banking commissioner. And so part of our process is that when we're doing the audit, we actually go online to that website and verify that the banks that you're using are participating, because that basically eliminates the risk of any of your deposits over $250,000. Okay. So that's a good thing. And then we talked about the investments that are allowed by statute and are required. And so on page 13, you guys have about 87,000 in Colo Trust, which again, that's a local government investment pool that is only available to local governments. And before 2008 and all the issues with the markets dropping and everything, they had a very favorable rate. Now their rates are pretty comparable, just because the way the markets are these days and the economy and how bad it is as far as investment earnings. So again, we take a look at that. And again, the Colo Trust, we look at the ratings, and it's got the highest rating by Standards & Poor's. So that's always a good thing. Okay. So then,
Question.
yeah.
Do we have restrictions associated with that investment? You're putting things into investments?
The only restrictions are by statute.
Okay.
Okay. And so, they're on page 12. So down there near the bottom, we talk about, there by the bullet points, those are the different investment vehicles that are available to the town. And again, that's required by the investment statute for local governments. I don't know if that answers your question.
Yeah, I didn't know if we were required to set it. I mean, yes, we have the table, but I didn't know if we were required to set aside something else.
No. And a lot of
investments
times
or-
that will be governed by actions of the Board of Trustees. The other time I see required restrictions is if you have debt, general obligation debt or revenue debt, where they required like a reserve to be set aside. Okay.
Thanks.
So right now, none of your cash is restricted. Okay.
Kyle, I have a question. Is the Colo Trust account, should it, or is it calculated into the amount of reserve that we have, or is that totally different than? Because it just kind of sits there and doesn't do anything. Is that considered part of the reserve we should have, or not?
Not necessarily.
Okay.
I mean, we'd have to go back and see what the history is of when the town first started investing in Colo Trust, if there was a chunk of money that they wanted to put in there. But from what I can tell currently, there is nothing that's requiring that.
Okay.
But the town could say that, yeah, we want to use this as our reserve.
Okay. Thanks.
Okay, so then on top of page 14, note 3. So, I talked about capital assets earlier. This is a table that shows all the capital assets, land, buildings, infrastructure, improvements, vehicles, equipment, things like that, and the related depreciation on those assets. And then down at the bottom, we show the depreciation that is calculated each year and how it's kind of split up between the 4 different categories of expenses. And, your public works primarily because your streets, that's your big dollar items. So that's part of the reason your public works depreciation expense is so much higher. Okay. Then on page 15, top note 4 there, public entity risk pool. Again, this is required disclosure as far as insurance that the town has. The town participates, in CIRSA. And so basically that, covers all your property, casualty, liability, workers' comp, insurance coverages. Okay.
I thought our workman's comp was covered by someone else.
Yes, that's through Pinnacle.
Yeah, I'm sorry.
Okay.
You're right. Yeah, Pinnacle. So, then down below on note 5, this is explanation about the Tabor Amendment. And then the history as far as in 1998, when the voters approved to basically de-Bruce. Even though you de-Bruced your revenues, and then again, also in 2012, the approval for increasing the property taxes, because again, you guys can't increase the mill levy without a vote of the people. Okay. And then we talk about the 3% emergency reserve that's disclosed in the financials. Okay. And then the last paragraph there, hopefully this will go away here in 2022, but we put this in starting in 2020, the uncertainty related to the coronavirus pandemic, because we didn't know what type of economic impact it would have on the town. And so again, we left it in there for 2021. We'll have to look at it for 2022 and see if it merits including. So that kind of covers the footnotes. And so then the required supplementary information. This is again required disclosure by the accounting standards of your general fund. And so this is your general fund budget. And so by statute, the town is not allowed to spend more than they budget or what they expect to spend. And so during the year, I can't remember when it actually took place. I think it was, I want to say June or July meeting. There was an amendment to amend the general fund budget and the capital improvements fund budgets. And so we show the original budget and then the final budget compared to actual. And so the thing from the audit standpoint we key on is about 2/3 down the page there, your total expenditures. And we look at the variance column to make sure that your expenditures are less than what your budget or your amended budget was, which you were 44,000 to the good. So that's what the statute says, is that you can't spend more. So we look at that. As you can see, then the transfers out, in your budget process, you anticipated 96,000 to transfer out and you only had to transfer out 84,000. So that's good. That covers the general fund budget. And then on page 18, there's certain requirements as far as disclosing the budget calendar and the budget process of the town. And then on page 19 and 20, these are your conservation trust fund and capital improvement funds budgets. And so again, we look at, your expenditures and your transfers out. So even though it looks like you overspent $6, we look at the transfers out below since you didn't have any actual transfers out. Those two net to the good. So no issues there. And then the capital improvement fund budget, as I mentioned, you guys also amended it during the year. Primarily, the biggest thing was to, because you received that money from the Kirkpatrick Family Trust. And so anytime you receive a new revenue source, by statute, you're allowed to appropriate that money by amending your budget to spend it. So if you receive a new revenue source, or if one of your existing revenue sources are coming in a lot higher than anticipated during the original budget, you're by statute allowed to appropriate that excess to spend. And so therefore you can amend your budget. So then following on pages 21 and 22, this is called the Local Highway Finance Report. We auditors aren't a big fan of this report because no two municipalities prepare it the same way, but it is in statute and it's required to be included because you guys received the local highway finance or the highway users tax monies. This local highway finance report is required to be included as other information in the audited financial statements. And so that's the purpose of these 2 pages. And so then that covers the financial statements. Any questions before I talk about the management letter?
Doesn't look
Everybody
like
good?
it, so.
Okay. So then the second document, as I refer to, is the management letter. And again, my professional auditing standards as your auditor require me to communicate certain things to you, the governing board of the town. And so that talks about my responsibility there on the first page. And then we get over onto page 2. And at the top there, financial reporting. And so as I mentioned earlier, we look at internal controls. And during that process, if we have issues, and during the whole audit process, if we have issues related to reporting, if we have to make a lot of adjustments to the accounting records in order to get these financial statements materially correct, then we step back and we say, okay, well, why did this happen? And so as a result, we have a material weakness in the financial reporting. Primarily because we had to make significant adjustments to the assets, to the liabilities, to revenues and expenditures. Now, we don't really get into the details of why it happened, but I will say a lot of it happened primarily because turnover in staff between 2019, 2020, not having knowledgeable staff. And so that kind of allows for that weakness to happen. And so, one of the things was the fact that the bank reconciliations hadn't been reconciled until you guys got new people in here. And, that's your key thing. That's something that needs to be done monthly, because otherwise, how do you know where you're at? That also then allows for good, sound financial reporting so that staff can provide budget reports to you guys that has accurate information. Okay. Now, in that process, did we find any concerns of, like money missing or anything like that? No, we did not. Because our testing was such that we were able to justify the revenues that were reported. We were able to verify the expenditures that were being paid out. Okay. And so again, that's something that we look at as part of the process. And so going forward, we say, go back and look at your policies and procedures, see where compensating controls can be put in place, and then just take a look at that. And one thing I tell my clients when I have this type of issue, I say, if throughout the year you guys have a question about something, call me, email me, ask the question so that I can't be your management function, but I can provide some guidance, because I've been doing this long enough. There's very few issues that are circumstances that I haven't seen. Okay.
Do we have documented policies and procedures for doing this, or do we need to create those?
They're not, I mean, it's not like a manual that you can go to and grab. And I will say that is very common with small municipalities, just
Okay.
because you don't have the resources and time in order to put it together. So a lot of times it's resolutions or ordinances that have been passed over the years. We also, the municipal code, I believe, has some guidance there.
Okay.
But really, as far as written, documented, I don't think that exists at this point.
Okay.
So that could be, something to look at in the future.
We can also follow the standard procedures for bookkeeping and accounting. Those are already written. And I want to ask one question.
Yeah.
Of you.
Yeah.
Sunday King, trustee. Is this your first audit of the town books?
No,
Then my question is, why didn't this type of discussion come up
It-
in previous,
it was.
in front
noted.
of the board?
Yeah, it was.
It
noted.
wasn't last year,
I presented this same letter last year.
but this discussion,
Oh,
no.
I don't know. I mean, because my presentations are pretty much the same each year
Mhm.
regarding this type of stuff.
I do remember you on Zoom.
Yeah, so, and it may be, I don't know
Okay.
if anybody had the questions or not.
If,
Okay, so.
what I found when I came on board, the
mhm,
board, was a big concern for the shoddy management of the bookkeeping
mhm,
and records by the past staff, and raised a lot of concerns for that. And that's what our new staff has been working hard on,
mhm.
to make it correct. So I want to applaud them
Yeah.
for the efforts they've made.
And I will address that when I'm finished here, but I can talk about it now, working with Nate and Becky and Brian, it really helped get through this process because they had quite a mess. And I think it was just because things were just they didn't know where to put it, so they just put it in an account. Not asking the question of, well, why? What is this? What does it relate to? But yeah, so, and I don't remember last year's presentation, but when I see something like this, I take it serious and I bring it up. And, it's up to the town board and town staff to decide if they want to implement my recommendations or not. So, but hopefully going forward, as you said, the town is on the right track. Okay. So hopefully next year, this will be a different looking letter. Okay. Okay. So, and then on page 3, again, if I had disagreements or issues while performing the audit, I had none, but you would have heard from me before today if I did. So that's always a good thing. But then the other matters section there at the bottom, segregation of duties. So this kind of ties in with the financial reporting, but I will say the town is not alone in this. I have a lot of small municipal clients that it's just the nature. Segregation of duties, there's no way around it. The only thing that you do is you look for compensating controls in policies and procedures. And sometimes that means more involvement by the board. For instance, one thing, I talk about the payroll here. One thing is that, payroll's controlled as far as setting up employees, removing employees, setting up the payroll. Yeah, you have an outside service doing it, but someone's got to give them the information, providing that. And so it's always good to have someone independent of that review it. And what I've recommended in the past is that perhaps a member of the board reviews like the payroll register The ideal thing would be before it's processed and paid to the employees. But if that's not feasible, then at least after the fact to say, okay, they looked at this, yeah, we recognize all these people. The pay seems accurate, and then sign off on it, saying that, yeah, I looked at it. Because that's what I look at as far as controls, is to say, okay, someone's reviewing this and making sure that it's signed off on. Okay. And so, in the prior 2 years, I did have quite a few more comments. So we are making a step in the right direction, because I just had those 2 comments there this year. So again, I'm always hopeful that moving forward, the town can make the changes and start getting things on track. Okay. And finally, I already said it, I'll say it again. I want to thank Nate and Becky and Brian for their help in getting all this information together. They have the hard part of, and especially in a transition year where you have turnover in staff and you didn't have the previous staff available to kind of hand the baton off of why things happened. And so really I appreciate their help as far as getting to where we are today. So thank you. Any other questions?
If anyone has additional questions as time goes on, like we said, get with staff and they'll forward them on the Kyle.
I'd just like to say thanks to Kyle and Evie, because they went above and beyond to try to help us answer some questions and figure things out. So it was a good partnership, I think. And I don't know where we'd be honestly without Kyle. So
Yeah.
I appreciate that.
And thanks to you two, and also pass on our thanks to Brian. He was a big help as well.
And I just want to make a statement just about the staff. I've been here now about the same time Matt, even longer than Matt was last year. And I'm just starting to figure all this out, like the revenue sources and all the monthly reports that exist everywhere from the counties, 2 counties, the state. And so it was, it's been a learning process. Literally just yesterday, kind of started putting together this year's revenues to where they actually make sense. So it takes a while to learn all that and to figure out where all these auto deposits are coming from and accounting for them in the correct location in our system. So anyway, so that's just that comment. So
And I am more than willing to help document. They used to, in the FAA, they called me Mr. Swim Lane, because I would create swim lane diagrams for the various processes. So yeah, while I'm here, on Monday, Tuesday, Wednesday, more than willing to help document.
We'll put you to work. Also just wanted to, talk a little bit. We've had a lot of conversations with Kyle as far as how do we develop, additional internal control measures to accomplish some of these better accounting practices. We did have it in front of us to have to catch up 2021 in order to get the audit done. That was required before we were able to get into 2022. And we're still, kind of combing through some of those things and questioning, why is this here? Should it have been here? Does it need to be somewhere else? That's an ongoing process, but we're far enough along now to where before the end of the year, we'll be able to have those discussions of this is what you can expect going forward, working with Kyle, making sure, I'd like to have Kyle's feedback on some of those. We're gonna have to create some bank reconciliation documents for you all to be able to approve, and that financial, the budgetary information. So you can expect that. And then as far as next year goes, working with Kyle to get on his calendar early in the year, from this process, we've already been able to start populating some of the documentation and those placeholders of information that's going to be needed so that we can move through this process a lot more quickly and efficiently next year.
Are we at a point where we can start getting quarterly reports?
We're almost
preferably
there.
in a nice,
Absolutely.
easy to read visual format?
Mhm. And those monthly financial statements as well. So
Okay.
I think that we want to make sure that we've got a process for internally viewing them and approving them, having that two-person review of those prior to them coming to you, so that we've double checked them. But we're getting there.
When do you foresee us having monthly bank reconciliations?
As soon as we get our 2022 caught up, we hit a snag with May of 2021. And the way their accounting software works, it does not allow you to reconcile the month after until the month that is done. Going through 2022, again, May was a wonky month. We had some hiccups there. I think Brian was able to get through those. And we are caught up through August. And then it turned to September. So it's with practice that that'll become easier. And I hope to standardize, to where at the first or the middle meeting of each month, you can expect that to be a part of your agenda.
So you think by the end of the year, we'll
Oh,
probably
absolutely.
be caught up and squared away?
Yep.
Okay, Kyle, thank you very much for conducting it and coming in and making the presentation to us.
Oh, you're welcome. This is a part of the audit process I like. So I think you guys just need to accept it. And then once I get the signed rep letter from you, then I'll get you the final copy with instructions of how to file with the state.
Okay.
So hopefully within the next 24 hours.
Okay, so our action would be to basically accept, which would mean we'd have a motion and a second to accept the 2021 audit report. And if you're okay with it, I'll go ahead and make that motion.
Yep.
And you need a second?
Yeah.
I will second it.
Okay, it's been moved and seconded. We accept the 2021 audit report. All in favor, say aye.
I,
Aye. Any opposed? No opposed. Motion carries. Thank you.
Thank you.
Thank you.
Yeah, thank you very much.
Outstanding. Thank you.
And that was the last item for our formal meeting. So we will adjourn the formal meeting at 11:09.